Welcome to the Currency Index Market Report.
Good morning and welcome to the last video market report of the week from Currency Index. This week has been a very tumultuous week on the currency markets, mainly for the pound actually. The pound has suffered greatly as a result of Mark Carney, the Governor of the Bank of England's comments about interest rate rises. He's basically put off the chance of any rises before February of next year. The markets have been pricing in rises before that, and subsequently the pound lost a lot of strength when he said that. I think the plan is for them to do a fairly steady batch of interest rate rises from February next year, so that's looking good for the pound when it starts to happen, but in the short term not so good as investors move their investments out of the pound because it's not as high yielding as they can find elsewhere. As a result, we've obviously seen sterling to euro and sterling to dollar rates drop significantly, and that's not great for those of you obviously who are looking to buy overseas or move currency for your businesses. The euro is also in trouble, not doing very well as a result of some very poor growth figures from France and Germany yesterday. Obviously the two biggest economies in the eurozone, so their performance pretty much reflects the whole bloc's position, and that's not done any favours at all for the euro. But as a result of the pound's troubles, that's actually meant the euro's managed to make some gains against the pound, albeit not elsewhere. The dollar is still very much in favour at the moment, with obviously the other two current major currencies struggling a bit. So rates for buying dollars are even worse as a result of that. If you do have dollars and you're looking to buy another currency, it's looking great though. Or certainly back on track, having been very weak for some time. If you do have a sterling base requirement overseas, so you're starting with sterling and buying another currency, you are still pretty close to the highs we've achieved in the last 3 months, so probably worth considering a forward contract just in case things do get worse before they start to get better again in February of next year with those interest rate rises. So make sure you stay in close contact with your currency index account manager who can talk you through forward contracts, explain how it all works and what the best options are for you with your currency purchase. We'll be back again next week with more currency news, and we'll see you then.
Visit currencyindex.co.uk to save money on your next currency exchange, or call us today on 0800 043 2623.